We're kicking things off looking at the economy of the most industrialized nation on the African continent, and that is South Africa. Third quarter GDP growth coming in at 0.5% quarter on quarter. That, of course, down from a revised 0.9% in the second quarter of this year. Annualized, it comes out at 2.1%. And a couple sectors there, the mining and agriculture sector there, some standouts. We're going to now head to Johannesburg, where we'll be speaking with Yvonne Mhango, Africa Economist at Bloomberg. Yvonne, thank you so much for joining us. Appreciate your patience there. How would you assess this 0.5% quarterly growth for the South African economy? Is it is it show encouragement? Is it to be celebrated, or is it? How do you see it?
Well, it was a slowdown from the previous quarter. So indeed, yes, the economy grew by 0.5% compared to the second quarter, which was a slowdown from 0.9%. The reason for that slowdown, though, was there was a surge in imports. So that offset the smaller increase in exports. But other than that, if we look into the numbers, what was encouraging is that household consumption continued to grow at a decent rate of around 0.7%. Keep in mind that just over a year ago, household consumption was in decline, so we're continuing to see a recovery in household consumption. But the big news, I think, from the expenditure side in terms of GDP data was investment. We saw gross fixed capital information expand by 1.6% compared to the preceding quarter, and this follows 3 straight quarters in decline. So that was encouraging, suggesting that we are beginning to see investment return to the economy.
All right, and I know mining is pretty important to the South African economy. Well, what do you make of the I guess 2.1% growth in the mining sector?
Yes, so that was encouraging. If we look at the year on the quarterly numbers, yes, mining did perform pretty well on the production side. I think that reflects stronger prices in the third quarter of the year that helped in terms of production on the precious minerals front. So mining did particularly well, and we are seeing it translate through as well to the trade numbers.
I do want to get your thoughts on the agriculture. I think we've talked to you about agriculture in the past. What do you make of that sector's performance? Not as good as, as high as mining. I guess it was the segment that was up like over 1%. What do you make of agriculture's performance?
Yes, so on a quarterly basis, it was the second biggest growth performer after mining. So agriculture actually has done pretty well, particularly if you look at it on a year-on-year basis. If you may recall, a year ago, third quarter of 2024, there was a significant decline in the agriculture sector, and that reflected the impact of the drought that was in the preceding year. This year, we are seeing a recovery, and on a year-on-year basis, the agriculture sector actually performed pretty strongly. And as you see also on the quarterly numbers, it was the second fastest growing sector. So on our front, in terms of production numbers, it did pretty decently in the third quarter.
Now you mentioned the gross fixed capital formation up by 1.6%. I think you mentioned that earlier in your first answer. Can you expand on that just a little bit about the importance of the growth in that particular sector?
Yes. So as I mentioned, gross fixed capital formation had been declining for the preceding 3 quarters. We actually haven't seen growth that strong out of gross fixed capital formation since 2023. So implying that investment wasn't taking place in the economy, which probably explains why GDP growth has been less than 1% for the past couple of years. The fact that we are seeing a pickup suggests that we're beginning to see the fruits of the ongoing reforms. These are reforms in the power and logistics sector. It also suggests that the pickup we've seen in household consumption since the second quarter of 2024 is starting to result in some increase in capex spend on the business front.
Great stuff. So we are in the fourth quarter now as we speak. Festive season coming up. Well, what's your outlook? Do you expect a pickup with respect to how the economic growth for this particular quarter?
We expect growth to be relatively steady in the fourth quarter. So household consumption, of course, will continue to expand, helped by the festive season, as you've mentioned. But we anticipate some moderation on the export front, in part related to the US tariffs that are in place that are hurting in that particular sector. On the production side, the output data we are seeing suggests that we'll see some slowdown on the manufacturing front, and that may temper activity, at least in the industrial sector.
All right. Now, I want to, forgive me for asking you about automobiles, but the data coming from the automobile sector is that new vehicle sales climbed by 12.5% in November. I know South Africa does have, a healthy automobile sector. What's your takeaway from that stats in terms of the sales of automobiles?
So that's encouraging, yes. Double-digit growth in the automotive sector, at least in terms of vehicle sales, and that partly reflects this pickup in household consumption that I've mentioned previously. That's on the back of lower inflation as well as lower borrowing costs. We've had rates come down over the past 12 to 18 months, so that's also helped in that space in terms of supporting that expansion. We've also seen an influx of imports of vehicles from China and India, which are cheaper, more affordable vehicles, and that's also been met well within the market in terms of demand and driving the vehicle sales numbers that you've mentioned.
All right. Now, I wanted to get your thoughts. I've really been dying to ask you about this. The decision to move the CPI target band from 3 to 6% to 3%. I think it was last month. Can you talk about the implications of that and what that means to have that new target band for inflation?
Yes. So in July, the South African Reserve Bank announced that they'll be lowering the inflation anchor to 3% from 4.5% previously. And that was confirmed and made official last month by the Minister of Finance during the reading of the midterm budget. In terms of implications, it does mean that we should see inflation expectations moderate going forward. It helps reduce the inflation rate that unions use to negotiate wage increases, so also supporting further moderation in inflation. It helps bring down interest rates, so we're expecting lower borrowing costs going forward if you've got lower inflation. Another positive aspect about it is that it brings South Africa's inflation in line with that of its emerging market peers. And when that happens, it means the South African rand doesn't have to depreciate as much as it used to previously in order to remain competitive. So that means a firmer rand going forward as well.
Fantastic. Yvonne, just one more question on unemployment. I mean, Statistics South Africa is still reporting unemployment at about 31.9% for the third quarter. Do you see anything being done by government or any policies or anything that can improve the jobs picture going into 2026?
So with us seeing brisker growth, the anticipation is that, yes, you start to see some dent in that jobless rate going forward. And unemployment actually dropped in the third quarter, though, as you've said, from the number of over 30%, it still remains alarmingly high. In terms of trends going forward, with growth picking up, the anticipation is that we continue to see some moderation of that employment rate. We haven't had unemployment below 30% since before the pandemic, so that in itself would be an achievement. But unfortunately, with the tariffs that were imposed from the United States, that's made conditions pretty challenging for the automotive sector in particular, which exports to the US. We're already hearing of the downsizing there of some businesses, job losses. So that could undermine the bringing down of the jobless rate going into 2026.
Yvonne Mhango, Africa economist over with Bloomberg. Thank you so much for joining us from Johannesburg. We really appreciate your time. Thank you.